Hi folks, Scott here, and this is the wrap for Tuesday, August 13th. A very interesting day today. Now, just looking at a 5-minute chart like you see here of the S&P 500, this may not look that unusual, but it actually is. If you break it down, you see that the open and close were both above the prior highs, the high of yesterday's range, right, open and close, and that the low of today traded through yesterday's close and through yesterday's open. Maybe more obvious here on this daily chart. So open and close above prior highs, but the low traversed all the way through yesterday's open and closing prices. I suspected that might be an unusual and interesting pattern, and it is. Let me show you the results for fading gaps following such a pattern. And there you go. It's only happened 13 times in the past 11 or 12 years, and down gaps appear to be favorable, and up gaps rare in 1 out of 3. Now, can you bet the farm on this, like betting on a gap down? No. Betting on a gap up being risky? No. But it does tell you it's an unusual situation, so if the market's really unusual, you may want to be, and we don't know if the market's really unusual, this is just a unusual setup, but this particular thing is somewhat rare, and that gives me a little bit extra caution, and it confirms my gut suspicion, as some folks in the room pointed out as well, that an up gap may be a little riskier, because this is pretty bullish action, and sure enough, a down gap looks to be above average in probabilities for tomorrow. So I'll rerun these numbers for our members in the morning using our MTG stop parameters to confirm the tradability when using a reasonable intraday stop or a volatility adjusted stop. And as always, I'll defer to our gap guides and my worksheet before I make my final decision. But I thought you might find that somewhat interesting. All right. Let me show the data for today. So we opened on the worksheet. This is a summation of the 8 individual indices gap guides. And we opened above the highs in most, if not all, the markets today, and it was 53% historical win rate, profit factor, dead neutral, right at 1. 1 means it's a break-even strategy, which made as much money as it's lost. And then between the high and close was just a real small win. It was only like 1 point of the ES. There were no unique day factors. There were no unique patterns. So this was a pretty easy pass for me. Now, as always, I share a little additional research. The nugget from last night's video was showed that phasing sizable up gaps, or correction, sizable up gaps after a sizable down gap filled, and sizable doesn't mean large, it's large-ish, greater than 30% of the 5-day ATR, when less than the 10 and above a 200. So yesterday's sizable down gap that filled during the similar market conditions was a little bit bullish, as one might suspect. Odds favored a gap up, which is what we got today. But that was a tradable gap. Historically, these have retraced, confirming the move. So that was a positive for shorting up gaps today. Tuesday of OPEX week under similar market conditions. Yuck. Only 8 of 20. That was a concern. And let's see. Up gaps when less than the 10 and above the 200. That are below the high of 2 days prior. That was actually a big positive today as well. It's a unique pattern, but it's basically showing the 2-day momentum was to the downside. And then up gaps in August have been okay. So actually, I guess you have 1, 2, 3 of the 4 unique factors favoring gap fill. But these gap guys are just too weak. Look at these numbers. There's 3 different systems with big databases attached to them, and generally big sample sizes most of the time. And you see these are really weak numbers. Market condition for the UH zone was terrible today, terrible for the patterns for the ES, terrible seasonality. I mean, you are welcome to short that all you want, but you're just gambling. Okay, so with such weak data for the UH zone today, and the worksheet across all the indices not being much better, as I just showed you, right, the average was a little bit better than what I just showed you in the ES, then this was a pretty easy pass, and that's essentially what I said here. It's just a toss-up, and I don't trade toss-ups. Neutral gap guides for the UH zone, mixed factors for the worksheet. So similar to yesterday, fading gaps at the open is a 50-50 proposition with strong potential cross currents in both directions. I don't say that much, and when I do, it's because you've got such strong and decent size samples or tests that show that you've had action, strong action one way or the other, lopsided. And when they meet, sometimes the market won't go anyway. Other times you'll get days like today And if you happen to have not noticed or seen the markets today, this is pretty unusual action. Serious selling. 10, 11, 12 points right off the bat of the open. Sucking in shorts. I reminded people to be careful. We're testing the lows. It was the last line in the sand for the bulls before we'd break down, right? Because there wasn't much below. So we talked about this today, that expect the bulls to try to hold here, and if they don't, then we're probably going down here measured move. But as I said yesterday and today, more likely in the middle of the month to get a bounce before we sell off. If we sell off, but more likely to bounce. And man, it was, I wish I could have predicted it. I did tell people in the room, we talked about it, and a couple people gave me kudos for predicting that we're going to get a sizable move, that this was a tradable inflection area anywhere in here, get long or short, 50-50 on which way we break, or take the first move and risk 5, get on the other side of this congestion right here, which is about 5 points of movement, and go for at least 10 in either direction. And some people did that and nailed it. So congrats to you. I did not, but instead of beating, I used to really feel bad about that. Now I just recognize that I'm pretty decent at identifying these inflection areas, and it helps a lot of people. So that's why I share it. So missed the easy gap fill. Wasn't real big. Happy to miss it. It was a 50-50. Wasn't worth risking 5 to make 3 points today. 15-minute and first hour range guys did not show much. However, I did do the fade the fill in the spirit of disclosure. Small trade, half size position, and was stopped for minus. We actually got my first target hit for +2. I went long at 86.75, a couple ticks below gap fill. It rallied exactly 2 points. Probably hard to see here. Traded at my target at 88.75. Didn't fill me. And I tightened my stop underneath the lows. I got stopped for -2 ticks on the first half of the trade. So buffaloed on that again. I hate saying that word. I've been saying it a lot. It's just the streak I'm on. And then I did leave my other stop in place and lost 3 points on that. So I lost an average of 2 points on the discretionary fade the fill trade. No other trades for me. I did an end of the day trade and lost 1.5 points. Thought we may treat this may act like a gotcha with some longs. Just pure discretionary, tiny trade. Anticipating possible rally, didn't get it, so lost a little bit of money today, nothing major, and interesting day. So it sets up another interesting day tomorrow, and we'll see what that brings us. So there you go. That is the wrap for Tuesday, August 13th. Have a good one.